Hello, today is Wednesday, June 9, 2021, and thank you for joining me for another edition of the Market Commentator Podcast. My name is Andy Wilms, and I am the President and CEO of the Milwaukee Company. And joining me this morning once again is my co-host, Jake Wilms, who is a quantitative analyst with the Milwaukee Company. Today, Jake and I will be discussing the renewed surge in the so-called meme stocks, and we'll also touch on the debate that's surrounding the enhancement of unemployment benefits. But before we get started, I want to please remind you to keep in mind that this podcast is for informational purposes only, and that the views expressed today in the podcast are Jake and my personal views and not necessarily those of the Milwaukee Company. So, Jake, let's begin by talking about the return of meme madness to Wall Street. You know that AMC's recent rally has put its gains to well over 2,000% for this year, which surpasses even GameStop's 1,400% advance. And these two are not alone. You have other companies like BlackBerry and Koss and others that are gathered lots of attention from young retail investors looking to buy the most heavily shorted stocks. So let me ask you, what are the dynamics at play here?
Yeah, it's a really interesting phenomenon. Retail investors have propelled AMC and others with this buy the dip mentality for one reason. I know that a lot of people have been creating a meme out of the concept of diamond hands. If you've ever heard of that, it's a term to describe people who don't sell and they wait and wait and wait, even when it's looking bleak. If you maintain your position and hold, and you hold the line, or you have diamond hands, and they have emojis that can kind of demonstrate that with a diamond and your hands going up in the air. And so you see that on social media a lot, and it's this combination of that and people with this ready willingness to buy the dip, looking for opportunity, have helped a lot of these, what you've described as meme stocks, kind of grow. If just looking at AMC in particular, this one has had a lot of trading activity this week. On Wednesday, over 700 million shares were traded. So it's a lot of activity, even for the context of what we're talking about. On Wednesday in particular, what we were just talking about, the AMC, some people are saying that short sellers lost almost $3 billion on just that one day alone from the way that the stock price moved. And obviously, that number is going to be relative to the current day price, so that'll change from day to day. But one thing I saw on CNBC that was interesting is that the reporter looked at the percentage of the stock being shorted, and even though Wednesday was so bad, the overall shorted percentage didn't change very much. So the short sellers are standing pat, and the investors are standing pat. So it is a battle of wits in some ways, and I find it really interesting to watch. Actually, you can go on a website called highshortinterest.com, and you can take a look at all of the most heavily shorted stocks. And it's popular on social media for identifying the next, meme stock, as you say.
There's little doubt that even the people trading in these meme stocks like GameStop or BlackBerry, they don't really believe that the price being paid for those shares can be justified by either the financial statements or their future prospects, do they?
Yeah, that's unlikely. I can't speak for everybody, of course, and I'm sure there's probably some people out there, at least, who believe that AMC and GameStop can improve, as a business. But I would agree with you in that my gut feeling is that a lot of this is speculative in nature and, building on the hype of the situation. AMC, it's been quite a week for them. They're a company that's kind of become the king of this whole situation. They're, as most of you would know, they're a movie theater chain. And it's not like movie theaters are in the best of market conditions right now, given with COVID, and then have nobody in theaters, and streaming services have kind of slowly been ramping up and kind of taking out that market share for people to want to go out and purchase a movie ticket and sit in the theater for a night. So I totally see where you're coming from in that regard.
Yeah, it's more of just trying to capture a profit on the momentum, getting a bunch of people together and say, hey, between all of us, we can really pump this stock up, and then stick it to the short sellers. We'll make money at their expense because they'll eventually, the short sellers are going to be forced to, cover their shorts,
Right.
and then so the people who are pumping the stock up and bought it, on the way, as part of the social media movement, I should say, they're going to be the ones selling it to them at a much higher price than they bought it. So they have a double benefit. They make money and they get to stick it to the man, so to speak.
Yeah, I've always wondered, with the start of the GameStop, I've had this question internally. I wonder if, Wall Street and regulators would look at trying to restrict that information flow, because it seems like such a competitive advantage, so to speak, when people can go on a website and see what people are betting against like that and basically use that information against them. Even if the short sellers have good reason to short the companies, if it's public information that they're being shorted in that way, then it doesn't matter if it's justified or not. Retail investors can gang up and kind of destroy that whole thing.
I gotta disagree. The short sellers aren't doing this ultra list, based on trying to be good guys. They're just trying to. They don't care why the shorts come true, and they just want this value of the stock to drop down. And they, for years, short sellers, for decades, short sellers have engaged in all kinds of things to try and, once they put on a short, to do anything they can to that company to lower its stock price. So I don't think the SEC is going to, has a real basis to step in, because from what I understand, and I don't participate in these chat rooms and whatnot, but I don't think they're telling anything that's not true. I mean, the only really reason the SEC would have that to step in is that they are if they start saying things that are improper or untrue, or they start hiring, people are paid to pump a stock, that kind of thing can get you in trouble. But there's nothing wrong with you getting together with a group of your friends, albeit online friends, and say, hey, you guys, let's buy a bunch of GameStop. We can push the stock up really high. There's a bunch of people who are going to have to cover it because they're short it, and we'll be able to make money off it. I don't think that's something the SEC should regulate, but that's
Yeah, I wouldn't say I necessarily agree either. It's just something where my line of thinking would be, I wouldn't be surprised if, the major players of Wall Street lobbied for that to happen, because they're the ones getting killed and the retail investors are the ones doing well.
Right. Well, speaking of the SEC, did you see that? Was it last Thursday, the SEC, that AMC announced they would be issuing more shares in order to raise capital as a result of the inflated price of its stock?
Yeah, they've been doing that. They've had two separate share offerings, I believe, in the last 3 days. They've been constantly pumping out, basically selling shares.
Yeah, and then their stock, that was, and took a big hit on Thursday after that announcement. But
right, I think it plunged almost 30% or so, and it's a lot of volatility with AMC just in general. His intent was probably to capitalize on that rally and trim up some of their shares, but
I thought it was also
very sell. The price went down as well, so
I thought it was, if you take a look at that SEC filing, in it, they when they announced the addition of the issuance of the additional shares, AMC actually acknowledged that their stock price was being forced by had risen because of the retail mania that's going on, and they said that there was little justification for the high price that people were you would have to pay to buy the new shares they were issuing, and that you could very well lose all of your money if you bought the stock they're trying to sell you. Now that, I think, might ultimately get them into some trouble, because if they're telling people that there's no justification for the price and yet they're selling it at that price, I wonder if the SEC might take exception to that. So
yeah,
go ahead.
I was gonna say, yeah, I guess that's true, because you don't want to be. I think it's a requirement that everything you have to be selling has to be within good faith. You can't be purposefully as a company going out and overvaluing your own stock on purpose. So
Right.
it's just a unique opportunity. Things like that haven't happened.
Right. Well,
with
and
that.
you made a good point earlier when you said that, you referred to the people uh, investing in them as speculators. And I think one of the reason you're getting all this, people up in arms over what's happening is because they've lost track of the difference between investing and speculating. Investors try to generate return on their capital by taking on average or below average amount of risk, whereas speculators are looking to make abnormally high returns from short-term trades that are, tend to focus on positive momentum. But, as everyone knows, speculation is as old as the hills, and it'll always be part of the markets. But what we're seeing today is also very different from the way people speculated in the past. In the past, speculators really tried to capitalize on some hot new innovation that they thought would be the next big things. But today, as we talked about, young people who grew up on the internet are now using the internet to form buying groups that collectively could push stock prices well above their fundamental value, and in hopes of making a profit at the expense of the short sellers. So my view is, even though I've never been a speculator, as I think young people who choose to speculate are being unfairly villainized. While I prefer these, well-tested, academically sound strategies to manage portfolio, I think we all have to understand that speculation does play a very important part in the way our whole free enterprise system functions. Without it, it's a very important component of it. And while most speculators do go bust, that there are many examples of people who made a lot of money via speculation. So there's certainly more than one ways to make money in the market, and speculation can be one.
I want to shift gears a little bit if we can and talk about the job market a little bit, and these pandemic employment payments that have been going on, and where we go from here when they are removed. As you know, jobless claims have declined for the last couple weeks here. I think it's about actually 5 consecutive now, and they're still well above their pre-pandemic levels, but job openings are at record highs. And employers are saying they have been finding it increasingly difficult to fill job openings, especially with fast food. They're the ones getting hit the worst, where you'll see things trending on the internet with signs out front that their employees aren't showing up anymore, and this, that, and the other thing. So I just want to ask you what you think is going on.
Well, I think there's a lot of things going on here. You're right. There's been a good deal of debate over whether or not the increased jobless benefits that Congress approved as part of the COVID stimulus package, I should say, has led to people wanting to stay home and spend the day on the couch rather than going to work. The original enhancement was $600 a week. That went through July 2020. It dropped down to $300 a week after that, and that is supposed to continue to run through September. And there's a lot of employers who are saying, "What are you doing? You're giving these people so much money to stay home. We can't hire anybody." There was a survey of Colorado business owners, and 88% of them said that, in their view, enhanced unemployment insurance benefits was making it difficult for them to find new hires.
Is there any data to back up this? Anything that's supporting what's going on?
Yeah, it depends on who you ask, of course. There's data for just about any point of view that you ever want to have. The U.S. Chamber of Commerce, which tends to be a more conservative group, of course, issued a report that claimed that 1 in 4 recipients of the new benefits are taking home more in unemployment compensation than they used to make working. In addition, the Bureau of Labor Statistics reports that some 3.4 million Americans quit their jobs last February. That's a little bit dated, but it shows you the idea. And, the University of Chicago economist by the name of Casey Mulligan came out with an estimate that between 3 and 5 million fewer people have put off going to 3 or 5 million people have put off going back to work as a result of the government's $300 enhanced unemployment benefit a week employment benefit.
Yeah, I guess you could see that one of two ways, right? Of taking, especially that point about the difficulty that 88% of businesses, they're saying they're concerned about the enhanced unemployment levels, and people are saying that they're having trouble getting people to take a job when they're getting more money in unemployment. Kind of makes me wonder if the unemployment either could be too high and the wages were fine before, or if the wages are just been so low and they haven't had any other reasonable options up until now. And then now that they've had something else, they're able to readily grab that.
Yeah,
I think that people know that it's temporary, but if people are flocking to it, they just must really be, struggling for money.
and you're right. There's definitely another side to the coin. When CNBC took a survey of 1,000 unemployed workers, some 87% of them said they just haven't received a job offer in the last 6 months now. And 76% of those who were offered a new position said the proposed wages were lower than their prior job. So, but that just sure feels, I mean, you got to take surveys like that a little bit with a little bit of skepticism, because you're asking the people who are getting the benefits why they're doing it. But the Economic Policy Institute, which is kind of a progressive think tank, points to a number of factors as why people are staying home and why workers are hard to find, including high child care costs, fears about COVID in the workplace, and as you said, they point to the inadequate wages, that people aren't just getting offered enough money to make work worthwhile. And in another survey, 65% of those surveyed said unemployment benefits were not a factor in their rejecting a job. So there's all this competing data, and I guess it depends on what side of the political spectrum you fall on as to which set of data you believe.
Yeah, where do you think we go here? Like, what do you think is going to happen as these unemployment benefits dry up and we go back to our pre-pandemic levels?
Well, the $300 benefit, as I mentioned previously, is going to end in September. But there's 22 Republican-led states that are looking to cut it off sooner than that. And it's pretty interesting what's going on here. Like Montana has offered a one-time bonus of $1,200 to people who get hired that were previously receiving unemployment benefits. There's some good conditions on that, but that's a pretty nice incentive to get back to work. And Arizona is providing funds to cover up to 3 months of child care costs for those who return to work and earn less than $25. So some of these things make a little bit of sense to me. If there's not getting paid enough, then give them a bonus. If child care is the problem, then help cover that cost. And if people still don't get to go back to work, then that shows you that maybe there is a problem with the amount of benefits they're receiving.
Where do you come down on this issue? What do you think about all of this?
Son, when I think about it, I suspect, I mean, common sense sort of tells me that enhanced unemployment benefits are going to make it harder for employers to find workers, right? But I don't think cutting those benefits would necessarily solve the labor shortage problem either, which is why I like some of the what Montana, Arizona, and other states are proposing. But I do have to admit that I don't think much of the rationale for paying the enhanced benefits continues to apply now that the economic recovery is on firm ground and the number of job openings have reached record levels. I also think it's important to keep in mind that, jobs are important to people. That I think they add meaning to life that's hard to find elsewhere. And I'll I guess I'll also mention the fact that, paying these enhanced benefits is costing the government a great deal of money. And so, as we've talked about in the past, I am worried about the growth in the federal deficit and the resulting increase in the money supply that results from these policies. And my concerns there is higher inflation and a further weakening of the dollar. So I think we got to be careful here. I hope that we're able to scale back these benefits in a way that doesn't hurt people too much, but does create an incentive to get back to work.
Yeah, I think I come down a little differently than you, to be honest. I understand that a good career path can add meaning to life, like you're saying, but I think the people that we're talking about here are not working careers. They're doing tough jobs that pay little, like they're working at McDonald's, or they're cashing out at a Target, or they're you know cashing out or working at a gas station. These jobs that maybe get undervalued a little bit by people that aren't ever really exposed to them. And I think that they have a little bit of unique leverage in this situation, because there seems to be this kind of movement going in. The effect of every person refusing to come in strengthens their leverage and their side of the argument, that the amount of money that they're just getting paid just isn't worth it.
Uh,
And I think that you're going to see the minimum wage continue to rise, because I really don't suspect this issue is going to go away, especially with the Democratic, government that we have right now. I would anticipate some real changes in that regard, because no matter what kind of nice bonus that you're offering, or even I've seen like McDonald's and others offer short, cash bonuses to taking on a job, that isn't what people care about, because they know that that's only temporary, and that isn't going to change their standard of living either.
Well, let me tell you that many of those jobs you mentioned, I've had in the past, right? I was a mechanic in the past. I worked at the National House of Pancakes in the past. I put up big tops when I was in high school, carnival tents when I was in high school. I mean, I could go on and on. And I'll tell you, I think those jobs were instrumental to my, being being successful in my career. So, and I did find them to be meaningful, and I took pride in getting up early in the morning and going to work. But maybe that's a old school mentality. But maybe the combination of a higher minimum wage with the elimination of enhanced benefits could be a win-win solution. Certainly, one can make that argument. Well, I'm afraid, Jake, we could go on, and you and I could debate this subject for a great deal of time, but the clock has run and it's time for us to wrap up. So I want to just thank our audience for joining us again today, and that remind them to keep in mind that they should conduct their own independent research before acting on any information or opinions expressed during this podcast, and to ask that you don't act on anything you've heard in the podcast until you've discussed it with a qualified financial professional who is familiar with your personal situation and investment objectives. And with that, I'll wish you, Jake, and our listening audience a great day.
This podcast is for general informational purposes only and is not intended to be a solicitation, offering, or recommendation of any security, commodity, derivative, investment management service, or advisory service. Nothing in this podcast constitutes or should be understood as constituting a recommendation to enter in any securities transactions or to engage in any of the investment strategies discussed. Viewers should consult with an independent financial professional or independently research and verify information presented in this podcast before acting on it.